Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the economy in Russia, and specifically to talk about the surprising announcement that the Kremlin is now looking to privatize some assets and businesses that are currently state-owned. And this is a clear indication that Russia is now running short of cash. If you've been following the channel, you'll know at the start of the war, Russia had around $600 billion worth of assets. Now, $300 billion worth of those were held with overseas financial institutions. This was where Russia was doing trades with lots of different countries, where it was selling its oil, and so it was building up cash reserves. Now, that $300 billion has been seized by the West, and it's still frozen, so Russia doesn't have access to that. And one of the main things that Russia has been dipping into in terms of funding its shortfall on the budget has been its National Wealth Fund. So in today's video, I'll have a look at what's been going on with the National Wealth Fund. And we'll also take a look at what assets Russia has seized from the West, because lots and lots of multinational companies that were previously operating in Russia exited after the invasion of Ukraine, and the Russian state seized a lot of those assets. They also nationalized some other businesses where the Western companies were actually happy to continue trading, but Russia decided that they needed to take control of those assets. And some of those assets are now being lined up to be privatized. And if you put this into the context of your own business, if you had your own company and you were doing really well, it was making lots of money and you were swimming in cash, you wouldn't think for a second of privatizing that. You wouldn't think of selling shares to somebody else because it's going really well. However, if your business suddenly went into difficulty, if you couldn't pay all of the bills, you're running short of cash, then you have no option but to sell some of the shares, and you could sell that to friends or you could sell it to some stranger, an angel investor. And that's exactly what the Russian state is having to do now. It's going to sell shares in some of these businesses to bring some cash in to keep funding the war in Ukraine. So let's start off by looking at what's been going on with the National Wealth Fund. Now, before we go on any further today, I want to talk to you about Ground News, who I've been working with for the past 2.5 years and who I've partnered with for today's video. And they're offering Joe Blogs viewers an exclusive 40% discount on their Vantage plan, which is what I use. And what's brilliant about Ground News is that they're a news aggregator. They bring together stories from all around the world. And if we take a look at the articles that Ground News has pulled together talking about President Putin's recent approval of the sale of Goldman Sachs' Russian unit, you can see that they pulled together articles from 22 different sources. And what's great about Ground News is that they tell you the political bias of those media outlets. So you can see whether those articles lent to the left, lent to the right, or came from the centre. And that's really important to me when I'm trying to provide balanced coverage. And Ground News are offering Joe Blogs viewers a 40% discount on the Vantage plan, which you can access by scanning the QR code on the screen now or clicking in the link in the description below. This chart shows the movement in the liquid portion of Russia's National Wealth Fund between the start of 2020 and March 2025. And the liquid portion of the National Wealth Fund relates to those assets held in cash or something that can be converted into cash within a relatively short space of time. And the scale on the left-hand side of this chart is shown in trillions of Russian rubles, but I've also got a version in billions of US dollars that we'll have a look at in a moment. What this chart shows is that at the beginning of 2020, Russia was holding 7.7 trillion Russian rubles in its National Wealth Fund. That figure increased to 8.7 trillion by the start of 2021. And on the 1st of February 2022, around 3 weeks before the invasion of Ukraine started, the liquid portion of the National Wealth Fund had increased to 9.7 trillion. However, as you can see, that was actually the high point for the liquid portion of the National Wealth Fund. And 1 year later, the Wealth Fund was down to 6.4 trillion rubles, which was significantly lower than it had been in 2020. By the start of 2024, the fund was down to 5 trillion rubles, and the most recent data for March 25 shows that it's now down to 3.4 trillion, which represents a reduction of 6.3 trillion rubles, or 65%, from the high point at the beginning of 2022. And this chart shows exactly the same data. However, the figures have been translated into US dollars, and you can see that the shape of the chart is similar but not identical. And the reason for that is because the exchange rate between the US dollar and the ruble has moved around a lot over the course of the past 3 years. At the start of 2020, Russia was holding the equivalent of 125 billion US dollars in its national wealth fund. Interestingly, by the start of 2021, the equivalent US dollar figure had fallen to 118 billion. However, just before the start of the war in Ukraine in February 22, the figure had risen to $126 billion. Now, I think what's interesting about this chart is that in October 22, the figure actually increased further to 134 billion. And if you follow the channel, you'll know that there were some very interesting things happening with the exchange rate between the US dollar and the ruble at that time. What we saw immediately following the invasion of Ukraine was that the value of the ruble collapsed to less than 120 against the dollar. However, the Russian central bank then stepped in and started supporting the ruble, and the value actually increased to around 50 to 1 US dollar. And that was actually the strongest level that the ruble had traded at since 2015. However, by March 23, due to a combination of the fall in the actual amount of rubles held in the National Wealth Fund and also the fall in the exchange rate of the ruble, the US dollar equivalent held in the National Wealth Fund had fallen to $84 billion. And the most recently available data for the start of March 2025 shows that the fund is now down to the equivalent of 35 billion US dollars, which represents a fall of $99 billion or 74% against the high point measured in October 2022. And this dramatic fall in the value of the liquid assets held in the National Wealth Fund really explains why Russia is now having to privatize some of its state-owned businesses. If you've been following the channel, you'll be aware that Russia has seized a variety of assets and businesses from overseas owners since the war in Ukraine started. We talked in detail about Carlsberg, the Danish brewing company that had its business taken off it, Danone, the French food company, Uniper, the German energy business that was operating 5 power plants in Russia, and Fortum, the Finnish energy business that had 7 power plants and a lot of solar panels. All of those were nationalized in the interest of the Russian state. And I thought it was worth having a look at how many businesses have actually exited Russia and also those that have been nationalized over the past 3 years. These two very exciting charts, which are called radar charts, and allow you to plot a lot of information onto a small space, show us the number of companies that have exited from Russia in terms of their nationality. That's shown on the chart on the left-hand side, and also what industries those companies relate to. So let's start off by looking at the chart on the left, which shows us the number of companies by each country that have exited from Russia. And you can see that the USA is right at the top of this list. 92 companies have officially exited from Russia for good. The second highest is Germany with 68, followed by Finland at 46. And obviously Finland is a neighbour of Russia. It shares an 800-mile long border, so it would explain why Finland had so many business interests in Russia. The United Kingdom comes in at number 4 with 36, followed by France at 35, Sweden 26, Denmark, the Netherlands and Switzerland all come in at 19, followed by Japan with 18 businesses, Austria with 14, and Norway with 11. And you can see that in total, companies from 39 different countries have exited Russia in the past 3 years. If we now have a look at the right-hand side, which shows us which industries these businesses relate to, you can see that automotive was the biggest single casualty, with 43 companies coming from that sector, followed by electronics with 30, consumer goods and clothing 28, finance and payments 27. There were 26 companies from energy, oil and gas and industrial equipment, 25 relating to construction and architecture and also IT, 23 from food and beverage industry, 22 from fast-moving consumer goods, 21 from the chemical industry and 21 from manufacturing, 17 from logistics and transport, 13 from consulting and law, 12 from engineering and also hospitality and real estate, and 11 from metals and mining. And in total, companies from 45 different industrial sectors have exited Russia. And this chart plots the timeline of those exits. The scale on the left-hand side shows the number of companies leaving Russia, starts at 0 and goes up to 70. And across the bottom, we've got all the different quarters relating to the start of the war up until now. And I think the immediate thing that jumps out to you about this chart is that all of the companies did not leave Russia immediately following the invasion of Ukraine. In 2022, a total of 157 businesses shut their doors for good. They exited Russia and decided they no longer wanted to do any business there. Now, interestingly, in 2023, there was actually an increase in that figure to 191. In 2024, a further 119 businesses exited from Russia, and in 2025 so far, we've seen a further 14 businesses leaving the country. And I think what's interesting about this chart really is the fact that it's taken so long for a lot of companies to organise themselves to actually stop doing business in Russia. And that really is partly as a result of the fact of the logistics of actually doing that. You can't just walk away and close everything down immediately. You want to do some sort of staged handover or wind down of the business. And that's what's been happening for a lot of businesses. But in many situations, what's happened is that the Russian state has come along and said, actually, we think that we need to take over this business, or we're going to organise some form of sale and hand it over to Russian business people. Now, in terms of the scale of the businesses that have been exiting Russia, this chart put together by the Kyiv School of Economics gives us some details as to what those businesses were actually doing in terms of revenue and what capital and assets they held. And you can see on the left-hand side of this chart that so far 481 businesses have formally left Russia, and a further 317 are in the process of either completely leaving or suspending their operations. So let's start off by looking at the numbers for the businesses that have exited. In 2023, those businesses generated total revenue of $48.5 billion US dollars. They had capital employed of $23.8 billion, assets of $57.6 billion, net profit of over $3.3 billion US dollars, and those companies paid tax in Russia of $1.4 billion. And the businesses that are still in the process of leaving Russia had total revenue of $15.5 billion, capital of $16.7 billion, assets of $38.7 billion, net profit of $1.3 billion, and paid tax of $900 million. And of course, the reason why these figures are important is because Russia is likely to lose a lot of this tax revenue, because these businesses are either no longer trading in Russia or they've been handed over to Russian counterparts, and there is a major question as to whether or not they can continue with this level of performance. So what's the summary and conclusion today? Well, I wanted to post this video because I think the news that Russia is now starting to sell off some of its companies and assets is really big news, because this tells us that the Kremlin is struggling for cash. As we discussed earlier in the video, you wouldn't sell something that's been nationalized, particularly not in a socialist country where everything is meant to be owned by the state for the good of the people, unless you needed to. And Russia is doing this in a very interesting way. It's not offering a full sale of these assets. It's actually offering a minority investment. So the state will remain in full control. So it will have a controlling interest. It will be able to decide what happens going forward with the company, if there's any dividends paid, and all of that sort of thing. So in terms of who would be interested in making these investments, there's a big question mark, because clearly no overseas investors would want to get involved, because they've seen over the last 3 years that if you go and invest in Russia, there is a very real chance that at some point in the future, the Russian authorities can turn around and say, actually, we need all of this for the good of the state, so we don't really want anybody from overseas being involved in it, so we're now nationalising everything. So even though the Kremlin is offering shares in these businesses, it's not guaranteed that you'll always have those shares. They could actually be repatriated back to Russia at some point in the future. So I think it's unlikely that overseas investors will want to put money in unless they're doing it for another reason. So in theory, I guess China could be a candidate to come in and operate a joint venture on some of these businesses with Russia, in exchange maybe for guaranteed employment, if lots of Chinese people could move to Russia to start operating these businesses and doing things. However, I think it's probably unlikely that Russia would sign up to that, because One of the reasons why it nationalised things like the power stations that were previously owned by German and Finnish operators was because they felt that there was a security risk to letting that continue. So I don't think Russia would probably want China running all of its power stations. I don't think they would be happy with that concept. But China might do it in exchange for other contracts, maybe some more business or trade. But there is a major question mark as to who will buy this. The obvious candidates are probably Russian oligarchs, so people within Russia who've got lots of money that the Kremlin decides that they're happy to sell to. And that's really just moving money from one part of Russia into another part of Russia. But the point of today's video is really to go through the details as to just how many businesses have actually exited from Russia since the start of the war in Ukraine. And as we've seen, it's hundreds of businesses. And these are really big enterprises. We're not talking about a corner shop or some tiny little business that's closing down that has no impact on the Russian economy. We're talking about huge multinational operations that went to Russia 20 or 30 years ago, set up massive facilities, invested tens of billions of dollars into the Russian economy, creating employment, creating wealth, paying large amounts of tax to the Kremlin. Those businesses have now exited from Russia, and Russia has been scrambling around trying to find somebody to buy those enterprises. And in many situations, the price has been nominal. It's maybe 1 ruble, or in some of the cases, as we've talked about, they were nationalized, they were taken over by the state. And the big question is whether or not those businesses will continue to run in the same fashion. Will they generate the same amount of revenue and profit and pay the same amount of tax to the Kremlin? And I think the answer to that is that they haven't been doing that. That's one of the reasons why Russia is now running short of cash. And of course, the other reason is because the National Wealth Fund has been drained. We saw the data earlier in the video, how much it's come down. In US dollar terms, it's almost down by 75% since the high point in October 2022. And that high point was really driven by an unrealistic exchange rate that had been set because the Bank of Russia had stepped in and started supporting the ruble. So the overall summary of today's video is that the Kremlin has now announced that it's being forced to privatize some of the businesses and assets that it owns. The reason why it's doing that is because it's running short of cash, because it's having to fund the war in Ukraine, and it's seen a huge reduction in the amount of tax revenue that it's been pulling in from all of its businesses as a result of the impact of the sanctions and the exit of a lot of Western businesses from Russia. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. Thank you for watching this video all the way through to the end, and thank you so much to everybody that's supporting the channel. If you've bought me a coffee or sent me a YouTube super thanks, I really appreciate that. Thank you so much. And if you've signed up as a long-term supporter either through Patreon or YouTube membership, thank you for that long-term support. Really does help to keep me motivated. And here's something to put a smile on your face.